Well, hello everyone, and welcome to your Daily Five. I'm Leslie Jouflas of Trading Live Online, and this segment is for May 24th, 2023. We have a holiday weekend coming up at the end of the month, and the markets have been a little bit on the quiet side, except today we've had a little bit larger range movement. So we'll take a look at that. And the S&P has traded once again above 4,200, but it hasn't been holding up there. So let's take a look at some price level and the Nasdaq and the Dow Jones Industrials. You all may have heard this expression before regarding the markets, and that is that the market's main job is to drive as many people crazy as possible. But we're going to look, I think, at some structure today on the charts that's going to help us navigate what's happening and be ready for a move in either direction. So I'm going to be going through the charts of the YM. This is the futures chart for the Dow Jones Industrials. And we're going to look at the NASDAQ also, and we're also going to look at the S&P 500. And I'm going to do them in that order. And we're going to look at some differences between each index. So we're going to start off with the YM, the Dow Jones Industrial. So we're looking back here at a retracement going back to January 2022 highs down to the lows in October. And this retracement has gone to the 786. But notice when it got there all the way back in December. And since then, it's had a lot of choppy movement up and down. And recently, the rally up, we had a lot of sideways movement with it, and it's not been able to get through this level here. So on the Dow Jones Industrial, it's these highs right here, right around this 34,400, 500 level. And if we take a look back and we look left on the chart with this, we can see that this resistance area, a lot of price activity in it going back to where the market went into this big range. And just about the center of this range, and especially this clustering in here, is where these price highs have been testing recently. But one other thing to notice recently on this daily chart is look at how the Dow Jones Industrials has been moving to the downside. So I want you to keep that in mind when we look at the S&P 500 and the Nasdaq. When we take a look at a couple of indicators, we can look at the RSI, or relative strength indicator, and notice how that's also been declining. Now I drew this green line in. This is, we can think of this as a support line for the relative strength index. I've got the MACD histogram here, so this can show us some momentum, and you can see this move to the upside had very little to no momentum to it. Nothing really to speak of. There obviously wasn't anything that was going to push that price up through that resistance level. But if the RSI, if the price continues to decline and the RSI breaks this level, I think we're going to see more of a decline in the Dow, maybe down around these lows will be the next area. I think these lows are going to be important to hold. There's a lot of clustering in here. So the market was able to hold support in this level before moving to this upside. I think a break of that, we're going to see the market down deeper, possibly down back around these highs from October, November, and the December period. Now, the next chart we're looking at, this is the NASDAQ, this is the futures chart, this is the daily chart. And you can see the same retracement back from when the highs were made. The highs were made on the NASDAQ in November 2021. The Dow, they were made closer to 2022. So the NASDAQ topped out before the other indexes. And so I'm using that retracement from that high to this low back in October. And remember, the Dow's retracement was up around the 786. But look at the Nasdaq, even though it has been strong this year since the end of December and January, we've seen a nice strong rally to the upside. It's hit some resistance here. This zigzag pattern is called the ABCD pattern, and today it looks like we may be seeing some more downside. I've got this level marked in here because this was an area where the NASDAQ just ranged back and forth and back and forth, and then it broke above that. So any test down to this previous range, you want to see the NASDAQ hold in here. I think this is the low right here. In fact, I'll clone this line and just sort of drop it in over here in the lower end of that range. I think this is the support level. We want to see NASDAQ be able to hold on any pullback. If this level breaks, then again, same as the Dow, I think we're going to be seeing some lower retracements coming in, and we can take a Fibonacci retracement here. And let me see if I can get that on the top there. Well, that's pretty close for now. But notice how the 382 retracement is very close to the lower end of that range. So again, a break of that and most likely down to the 0.50, a stronger move down to the 618. So these are the levels that I'm watching right now on the NASDAQ. And now when we look at the S&P 500, this is the futures chart on a daily chart, and we look at the comparison of the retracement from the highs back here late December, early January 2022 down to the lows. And we can see how it's just hovered around that 50% level and the 4,200 level here, and here's where it popped above just a couple of days ago, and now it's coming back down. So the peak over here is the Nasdaq on its chart structure had exceeded that, and you can see that the S&P is still staying under there. That's right around that 4,300 level on the retracement ladder. If we take a look at the RSI, we can see that the RSI, if you look at my horizontal cursor, the RSI on this last rally up did not quite even get up to these peaks. Then now it's turned to the downside. And we want to be keeping an eye on this. We want to find a level here that we can use for support. So when I do that, I just start to look for where most of the common, lows are. In this case, this is the level that I'm seeing. So this level right here is a little bit below 40, about 35 level. Now each index, I know a lot of people say, oh, 40 is the bullish level for the RSI, but that's not always the case. Every market seems to have its own number, and the S&P on the low end of the bullish RSI can hover around 35, 36, 37. And so that's what I'm seeing. If we look, right across here, that's what we can see has been common with the RSI. So as the market does a correction to the downside, we don't want to see the RSI break probably too far below this peak, maybe come down towards here, but not too deep of a correction. And of course, breaking this, this is what we see when it's broken. You can see that, how you get this sudden, strong, swift move to the downside. So this is what I'm going to be keeping an eye on. And the MACD also on this last rally, it has been staying sideways here with this sideways range. We're going to take a closer look at this range in just a minute. But it was just sideways and then popped to the upside. But you can see it's not making any real momentum highs right now. So let's scale down a time frame so we can get a little bit clearer picture of some of these price levels to monitor. On my weekly subscription video that I do called Weekly Market Setups, this is the chart that I've really been focusing on with the S&P because this is really the one that I can see the most clear picture of the price levels. So back here, this red arrow, this is showing us an important area, and you can see how many times that it's been tested, and that's where I've got the lows of this big range drawn in. And this goes back to the FOMC March meeting. So these highs about 40.73, I think it was 40.73 and three quarters were the high here. And once the market exceeded that, again, that became a support level. So this is going to be a very important support level. If the market comes back down towards the low end of this range, we want to see that level hold. If that breaks, I think we're going to see a pretty swift move to the downside. Now, if we look inside of this range, and you can see how long it's been forming for, at least a couple of months, up, down, and back, the gaps here and there. And I just have different levels that I have marked out. So I'll mark different support and resistance levels as these big ranges form. And generally what happens within a larger range like this is it eventually winds down to a smaller coil within the larger coil, and that's going to be the price point that the market moves away from. So in this particular case, right around this dashed level right here, that was about the 4130 level, 30-ish. We'll make a little bit of a zone out of it. It doesn't have to be an absolute number, but the market was doing a lot of opens and closes around that price level. And you can see on the intraday chart, you can see how many times the market was opening, closing on the 60-minute chart around that level. So this little range in here on its own had the upside breakout towards the 4200 level and then exceeded it, breaking out to the upside, but then stalling out here and today coming back into the range. Well, there's different outcomes that breakouts can have, and this is one of them. It gets a little breakout, but it doesn't get the follow through. So what does that mean going forward? Well, if the market comes down and breaks this level, then a lot of times that means when you've had a previous breakout in the opposite direction, that the stronger move is going to be in that direction. One of the other things that you want to be looking for is if the price just comes back down, holds support again around this previous range, and just starts to form another range. Well, we know now that this high right here, that was like 42.25 level on the little breakout, didn't get very far. So this level now is the important resistance. I think if the market makes it above this level, and we see some nice momentum in the MACD, we see the RSI turning up and other indicators that we can use. I see some extensions up around the 4,500 level. I think 4,300 level right above there is going to be the first stop, but I do think the market would have the potential to get up towards the 4,500 level. So I'll show you again back on the daily chart of the S&P how I'm getting that. See, this is where I think that 4,300 would be the first level. That's at the 618, retesting this peak and some other past price data in that level. However, I do think that if we use this high down to this low, we're getting an extension, a Fibonacci ratio extension of 1.27. That's just taking the length of this swing, multiplying it by 1.27. It's added to the bottom and it projects it up. This is a really common extension ratio, especially in the S&P market. And that's coming in right around that 786 retracement from our high to low. So above here in 4,300 is going to be the first testing area. And of course, at that point, you really want to see that 4,200 hold again, if that occurs. And then if it makes it through that 4,300, above that 618, then the 40, just above 4,500 is going to be the next level. So for now, the price is back into this big range, but we have really good highs and lows mapped out. And of course, the center of the range is one thing that I always like to use and focus on when ranges form. So they're very good levels for be to be excuse me to be watching for either another breakout above this high, and you want to see momentum with it, or we come back in range for more time and a break below here and a stronger move to the downside. So that's what I'm looking at right now. And it could very well be that the resolution of the debt ceiling is going to be the catalyst for that move either up or down. So thanks for watching, and I'll look for comments as always. Feel free to visit me at Trading Live online, and I'll see you on the next Your Daily 5.